This segment of Delmarva Life is sponsored by Key Financial Services.
As market volatility rattles investors, headlines scream uncertainty. Many of us are left wondering, what do we do about our retirement savings? Now, should you ride out the storm? Should you make a strategic shift? Should you pull back altogether? With your future on the line, financial experts at Key Financial Services in Berlin say the right move may not be the most obvious one.
As stock markets continue to swing,
the last couple of weeks have been hectic.
The phones at Key Financial Services continue to ring.
It's one of those times where it's really important for retirees to have a retirement plan, not just an investment plan.
Investment advisor Colin Maycumber says a solid plan is a plan that protects you from market volatility.
The most important thing is, making sure that income is safe and stable, and that these market fluctuations don't impact our clients or really anybody's ability to pay their bills and go out and do the things they love to do.
He adds volatility is part of the market's DNA.
Typical retirement plan is built to last 30 to 40 years. Historically speaking, there's a market correction every 5 to 7 years. So, in our mind, it's kind of crazy to build a retirement plan that doesn't account for those market drops and that high volatility, making sure that, the income is secured first and foremost, but also that the investments and the nest eggs aren't overly exposed to, where we're seeing double-digit 10, 20, even 30% drops.
But he says that doesn't mean you can't make changes as your life changes.
Obviously, life changes, as we said, in 30 to 40 years. Who knows what's going to happen down the road? So there is definitely, you need flexibility in your plan, emergency expenses, things like that.
That's why Key Financial Services Operation Director Kristen Cohen says having a holistic retirement plan is important.
When we talk about a holistic approach to retirement, we're just making sure that all the eggs aren't in one basket so that you're diversified across different portfolios, different products, different asset classes, just to make sure that we're covering the basis when we go to withdraw money.
She says certain accounts are taxed differently, so it's important to know how and when to pull from them based on your unique situation.
When we meet with a client or a prospective client, we're going to ask you a bunch of questions. We're going to try to figure out what your objectives are, what your goals are, what works for you, what kind of liquidity you need. Are you risk tolerance wise? Do you want to be ultra conservative, ultra aggressive? And from there, we just tailor a custom plan to each individual person.
A plan that takes into account all tax ramifications.
We like to call them or refer to them as buckets. We want to make sure there are 4 different buckets that we can pull from as need be. So you have your taxable bucket, which are things like traditional IRAs. When the money comes out to you, you're paying the tax on all of that, just like you would normal wages. You have a tax-free bucket, which is something like a Roth IRA. So when you pull money from that in retirement, it's not hitting and affecting things like Social Security or Medicare premiums. Tax-deferred, you're growing that over time, so it is still taxable, but not when you're realizing the interest. So having all of those different options and being able to blend them together is what really makes a beautiful retirement plan.
A plan that can weather Wall Street's wildest storms.
History tells us that long-term the market does increase. Obviously, when we're in retirement, we don't have quite the time frame to ride out all of those events. So it's just about positioning that risk and return, and just make sure we're not taking any additional risks that aren't necessary out there. Just make that retirement returns look a little more stable and less of the ups and downs that we've been seeing really the last couple of years, but especially this year.
Giving you reason to stay calm and stay invested, because smart strategies built today could make all the difference tomorrow.
So whether you're just starting out and you've still got decades before retirement, or you're hoping to retire in just a few years, the experts at Key Financial Services can help you create a solid plan.